Did you know that Bitcoin's value skyrocketed from just a few cents to over $60,000 in just a decade? Imagine being able to predict the next big move in the crypto market with precision. In today's video, we're going to reveal how AI tools can help us analyze market trends and make accurate predictions about Bitcoin and other cryptocurrencies. Stay tuned because you don't want to miss this. Hi everyone, welcome back to Bitcoin Forge. If you're new here, I'm Imran, and on this channel, we dive deep into the world of cryptocurrencies, blockchain technology, and financial innovations. Today we're exploring the fascinating realm of market trends and predictions in the cryptocurrency space, with a special focus on how AI tools are transforming our understanding and approach to investing in digital assets. In this video, we'll break down the process of using AI to analyze market trends, predict future movements, and make informed investment decisions. We'll cover historical data analysis, sentiment analysis, predictive analytics, technical indicators, and risk management, all through the lens of AI technology. By the end of this video, you'll have a comprehensive understanding of how to leverage AI tools to navigate the volatile world of cryptocurrencies. So let's get started with our first topic, historical data analysis. Historical data analysis is the foundation of any robust predictive model, especially in the context of financial markets. By examining past market behaviors, we can identify patterns and trends that may indicate future movements. AI tools have significantly enhanced our ability to analyze historical data by automating the process and uncovering insights that might be impossible to detect manually. Let's dive deeper into how historical data analysis works in the context of cryptocurrencies. Historical data includes various data points such as price, volume, market cap, and trading activity over a period. By analyzing this data, AI tools can detect repeating patterns, anomalies, and trends that provide valuable insights for predicting future market behavior. For example, one common pattern observed in Bitcoin's price history is the 4-year cycle linked to the Bitcoin halving events. Every 4 years, the reward for mining Bitcoin transactions is halved, leading to a reduction in the supply of new Bitcoins entering the market. Historically, these halving events have been followed by significant price increases. By analyzing historical price data around these events, AI tools can help predict how future halvings might impact Bitcoin's price. AI algorithms, particularly machine learning models, are adept at identifying these patterns. They can process vast amounts of historical data quickly and efficiently, allowing them to spot trends that might go unnoticed by human analysts. These models can be trained on historical price data to learn the relationship between different variables and the resulting price movements. Once trained, they can predict future prices based on current and past data. One specific type of machine learning model used for historical data analysis is the long short-term memory (LSTM) network, a type of recurrent neural network (RNN). LSTM networks are particularly effective for time series prediction, making them ideal for analyzing financial data. They can learn and remember patterns over long periods, allowing them to make more accurate predictions about future price movements. Let's consider a practical example. Suppose we have historical price data for Bitcoin over the past 10 years. By feeding this data into an LSTM network, the AI model can learn the underlying patterns and trends. It can then use this learned knowledge to predict future prices based on new data. For instance, if the model detects a pattern where Bitcoin's price tends to rise after a period of consolidation, it can predict a potential price increase in the near future if it observes a similar consolidation pattern in the current data. Moreover, AI tools can analyze multiple factors simultaneously, such as trading volume, market sentiment, and macroeconomic indicators. By considering these variables together, the AI model can provide a more comprehensive analysis and make more accurate predictions. In summary, historical data analysis is a powerful tool for predicting future market trends in the cryptocurrency space. AI tools enhance our ability to analyze vast amounts of historical data, uncovering patterns and trends that can inform our investment decisions. By leveraging AI models like LSTM networks, we can make more accurate predictions about future price movements, helping us navigate the volatile world of cryptocurrencies with greater confidence. Now, let's move on to our next topic, sentiment analysis. Sentiment analysis is another crucial aspect of understanding and predicting market trends in the cryptocurrency space. The cryptocurrency market is heavily influenced by public opinion and investor sentiment. Positive news and social media buzz can drive prices up, while negative sentiment can lead to sharp declines. AI tools can help us gauge market sentiment by analyzing vast amounts of data from various sources, including social media, news articles, and forums. Sentiment analysis involves processing and analyzing text data to determine the overall sentiment or emotional tone. In the context of cryptocurrencies, this means analyzing posts on platforms like Twitter, Reddit, and news websites to understand how people feel about specific cryptocurrencies or the market as a whole. AI tools use natural language processing, NLP, techniques to perform sentiment analysis. NLP involves teaching machines to understand and interpret human language. By using algorithms and models trained on large data sets, AI tools can classify text data into different sentiment categories, such as positive, negative, or neutral. One common approach to sentiment analysis is the use of sentiment lexicons, which are lists of words associated with specific sentiments. For example, words like bullish, profit, and growth might be associated with positive sentiment, while words like bearish, loss, and decline might indicate negative sentiment. AI tools can scan text data for these words and calculate an overall sentiment score based on their frequency and context. Another approach is the use of machine learning models, such as support vector machines, SVM, or convolutional neural networks, CNN, which can learn to classify text data based on labeled examples. These models can be trained on datasets containing text samples labeled with their corresponding sentiment. Once trained, they can classify new text data with high accuracy. Let's consider an example to illustrate how sentiment analysis works in practice. Suppose we want to analyze the sentiment around Bitcoin on Twitter. We can collect tweets mentioning Bitcoin over a specific period and feed them into an AI-powered sentiment analysis tool. The tool will analyze the text of each tweet, identify sentiment-related words, and classify each tweet as positive, negative, or neutral. By aggregating the sentiment scores of all tweets, we can calculate an overall sentiment score for Bitcoin. If the majority of tweets are positive, it indicates a bullish sentiment, suggesting that the market may expect Bitcoin's price to rise. Conversely, if the majority of tweets are negative, it indicates a bearish sentiment, suggesting a potential price decline. AI tools can also perform more advanced sentiment analysis by considering the context and relationships between words. For example, the phrase "Bitcoin is not performing well" contains the word "well," which is usually associated with positive sentiment. However, the presence of "not" negates the positive sentiment, making the overall sentiment negative. AI models can learn to recognize these nuances and provide more accurate sentiment classifications. Sentiment analysis provides valuable insights into how public opinion and investor sentiment influence the cryptocurrency market. AI tools equipped with NLP techniques can analyze vast amounts of text data from various sources, helping us gauge market sentiment accurately. By understanding sentiment trends, we can make more informed investment decisions and anticipate potential market movements. Next, we'll explore predictive analytics, another powerful application of AI in the cryptocurrency market. Predictive analytics is a game changer in the world of cryptocurrency investing. By leveraging advanced machine learning algorithms, AI tools can make predictions about future market trends based on current and historical data. Predictive analytics goes beyond just identifying patterns. It involves making informed forecasts about future events and behaviors. Predictive analytics involves using statistical techniques and machine learning models to analyze historical and current data to make predictions about future events. In the context of cryptocurrencies, predictive analytics can help us forecast price movements, trading volumes, and market trends. Machine learning algorithms are at the core of predictive analytics. These algorithms learn from data and improve their predictions over time. There are various types of machine learning models used in predictive analytics, including regression models, decision trees, neural networks, and ensemble methods.